Hello traders, welcome to another edition of the weekly update from Trade the Bear. Today I will be talking about what's going on with the VIX. We'll look at where the bear is, and we'll take a few minutes and look at the ES, and then we'll switch over to some other markets like the NQ, bonds, oil, gold, the dollar, and then we'll look at the ones that we like to trade, which is KRE, QQQ, SPY, XHB, XLE, and XLF. At least these are the ones that we like to trade with Trade the Bear in this particular strategy. So we'll be covering that. So let's get started. Now, as we look over here, we see the VIX, and you can see the VIX is starting to come back down. We might as well go ahead and put our alert in for this because I like to have an alert around the 30 level, and it's just something that I always want to keep in play. So I'm going to put it at 30 right here. Okay, and so mark it above, and we'll create that. Now you can see, well, we better push that up. Let's push it up to 40. I'm just going to push it up to 40 just based on the volatility in the market currently, just a little close to where price is right now. But we always want to have something in there to tell us when volatility is rising, and we want to look at that. So I'm just going to put that alert on there. So you might want to do that just to give you an idea of what the what's going on with volatility. Now, if volatility's up, what's going to happen with options? Option prices are going to be up as well. So you're going to see the premiums higher. So as we collect, as we sell options, we're able to pull in some better revenue with higher VIX. Of course, the markets are more volatile, so the opportunity to get knocked out of a trade may be higher as a result of this. So where's the bear? Let's take a peek. So we'll start with the ES. I always like at the mini futures, and you can see here, we're kind of in this little channel, just kind of a simple little channel. Let's see if we can draw this. It's not going to be that easy to draw, but let's just say right here, we could take it from here and we could pull it back to about right there. So, we'll leave that up there. Let's see if we can get another trend heading in this direction. Doesn't look like, another thing I like to do is I like to look at the Fibonacci's, and let's see what's happened here with Fib. So this move pulled back to the 38.2. As you can see right here where that pullback happened. Okay, then the move that we're on right now pulled back to the 78.6. So are we going to just start trading sideways maybe? I don't think so. I think the amount of money coming into our market is still going to be pretty good as we go forward. A little bit of a doji candle today. This is Monday, by the way, of the following week. I'm a little late on my videos, but just wanted to take time and go over this. Now, let's go look at the different markets. Of course, that's the ES. And you can see over here, we're starting to develop a little bit of an uptrend. I do anticipate that this is going to get up here into these moving averages and maybe test this area up here. So we'll see what happens. The NQ, I think it was a little stronger today, if I remember right. Yeah, you can see we had a nice little push. We're starting to come out of this channel. Let's see, what was that last pullback? So we pulled back, not quite to the 78.6, but definitely the 61.8. There was a bounce off of that. And, let's see, let's look at this a little bit different way too. So let's go like this, and that move, and then back down. And you can see we've already we're sitting at the 2 standard deviation on the Keltner, which is basically an average of true ranges. And yeah, maybe we'll get up here into this 161.8 and get back up to the highs. Still amazing that we've been able to recover as much as we have with everybody being out of work and so on. When you look at this move from the highs, I mean, we're already most of it's recovered. It looks like, yeah, we're already past the 71. We're heading to new highs. That's just insane. And well, that's what the market does. It does what it does. So the market's about 3 weeks ahead. So I anticipate that, we're going to get back to work and money's going to start flowing and, and so on. How about bonds? Anything going on with bonds? Let's pull that over here. Yeah, still, just still sideways as ever. I can push this out as well. And, I read an article this week that was talking about how our market is the best market to go into, even though the bonds are, you can't even go into bonds anymore and expect any kind of return because it's just the return isn't there. So you're better off taking your chances in the market. And everywhere in the world right now, you've got zero interest rates. So, again, it's going to be the stock market. It's going to be the U.S. stock market is where the money's going to come in. So, just watch that. And by all means, this is a time to participate in the market for sure. And all right, so there's the bonds. Let's look at oil. Oil's starting to push up a little bit. Oh, wow, we're back up to 25 on the oil. So, again, look at this little area right here. We're at the 61.8. Notice it's kind of holding tight on the 61.8 area off of that last move. But as, people get back to work and maybe the inventories will start changing as far as oil goes, and we'll see some things change. Now, looking at the weekly chart over here, I am still saying be careful. Be careful because until this gets back up and moving, this gap is sitting here, that gap from here to here. I do anticipate that's going to be filled here relatively soon. And then the next one is going to be gold. Everybody's saying, hey, safe haven, go to gold. Gold's going to go through the roof because the dollar is going to get killed and blah, blah, blah. Well, gold is still just gold. It's not tied to anything. It's really, it's still an axis market. Granted, if oil's up, and if oil's down and gold's down, the dollar is going to be up. One of those is going to be up and two of those are going to be down. Those three kind of work together or work with each other or against each other, however you want to look at that. But gold is just not going to be, I don't see us going to a gold-backed dollar or anything like that in any time in the near future, even with the, $27 trillion in debt or whatever it is we have in the United States. Still just gold is just gold. But if it ever did come about and the fear, was to highly increase, you'd start seeing gold creep up again. I mean, these are pretty good moves. I mean, we're up 1750, 1765, 1700, 1690. It's just trading inside of this range right now. So no big deal on gold. And then the good old dollar. Let's see what's happening with the dollar. Yeah, the dollar's doing the same. So gold sideways, dollar sideways, oil down. Oil, partly up maybe in the last week or so, but this last week. So that's it for those. Now let's go look at our ETFs that we like to trade. KRE, as long as interest rates are going to be at zero, this is potentially going to make a move down. This over here is telling me that it's trying to reverse and make and start heading back up. But when you see this kind of price action where we get a push down, we go up and we come back over, probably not a very good sign for that. And as long as they're printing money like they are, this is going to probably not going to be moving up. So let's activate this and let's pull this up here a little bit better. So I'd say about right there. You can see this right here is still holding. So we'll see what happens in the next day or so if this will begin to make a move. And then from there we look at the QQQs, which looking at the NQs basically the same thing. So the NQ, the QQQs, those are going to behave relatively similar to each other. And then the SPY we like to trade. I am long this SPY. I'm long the SPY right now, basically with a long call and then a diagonal calendar with that as well. So I'm anticipating that this is going to break this top here and then start moving up some more. All right, so let's go look at XHB, home builders. Home builders was good to us last week. We did all right with that one. The still just in a nice little upward trend. Now we can get rid of this. Let's remove that. And bounce off the 20 period moving average, goes back up, bounces off the 50. So, you know, we've already filled that. We did fill this gap. So, you know, look for that to continue higher. That would be my, well, that's the way I'm trading it. So we'll see how it goes. And then XLE, I think this one's going to be a pretty good one for us. We've, you know, we're already starting to see this channel form here. So I anticipate that this is like oil. It's going to go up here and maybe test this. We'll see. We'll see. You know, we trade what we see. This is a trailing stop that I have. You know, we could talk about that in the future, how to manage a trailing stop. I'll probably put a video together on that real soon. So XLF. XLF is almost like a shot. It looks like somebody shot it with a shotgun. You know, you just have these pop, 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 you know. But it is trading in a channel. I am kind of long. I'm back long this again. So we'll see if it can make a way back up here. You can see where my trailing stop is, basically below the low of that candle. If it violates that, then I'm going to be back short again. This one's been a little frustrating. So let me back up and let's go to the ES. And let's ask ourselves, where's the bear? We always want to know where the bear is because that's going to help us know how to trade the market. So we saw VIX coming down, so the bear is possibly looking for a place to take a nap, maybe even go to sleep. Not quite hibernating yet, but not too far from that. And so, you know, that's what we always want to do. We want to know where the bear is. The bear is the one that makes us the money. When the markets come down, we're usually positioned really well for that, and the markets move fast on the way down. So that's why we are trade the bear, and that's why we're always wanting to know where the bear is so that we can be on the right side of that trade. As far as our results go, oh, I meant to share that. Let me pull this up. So results, here we go. Let's pop this right here. Okay, so this is our results page. You can see we've been as high as 84%, and now we're down to about 63% because I'm trading the XLF with that account, and the XLF, as you saw, is just kind of like a shotgun as far as how the chart looks right now. What we want to see for this strategy to really work is we either want to see the markets going up or coming down. So this sideways action makes things manageable. Makes managing these trades, you know, a little tougher, but we still, you know, we stay engaged, and everything seems to work out fine. So this is Trade the Bear. Visit our website and sign up for some free training. I'll be putting more and more of that together all the time. We've got some new equipment that's going to make it a little easier for us to do these videos. And so if you will, please subscribe to our YouTube channel. And I look forward to helping you become a confident and successful trader. This is Stacy with Trade the Bear. Have a good one. Bye now.